Be Wealthy and Smart, episode 909.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about central bank digital currencies and how they're a lot farther along than what they're letting on. This is coming to a head, and I'm seeing lots of articles about this, but I don't know if people in general are catching it because maybe you're not watching it as closely as I watch it, or maybe you are. But what I know is that central bank digital currencies are coming fast and furious. And while it seems like, oh, this is just a reaction to COVID, no. We know from facts and reports that digital currencies have actually been in the works for close to a decade. So this is not something new. This is something that may happen faster as a result of the pandemic, but it's not something that wasn't already out there. So what am I talking about? Well, today there was a report on CNBC.com about China's digital yuan and that it could pose challenges to the US dollar. So let me share this article with you. It was written by Dane Evans. It says China is beating the U.S. when it comes to innovation and online money, posing challenges to the U.S. dollar's status as the de facto monetary reserve. Nearly 80 countries, including China and the U.S., are in the process of developing a CBDC, or central bank digital currency. It's a form of money that's regulated but exists entirely online. China has already launched its digital yuan to more than 1 million Chinese citizens, while the U.S. is still largely focused on research. The two groups tasked with this research in the U.S., MIT's Digital Currency Initiative and the Federal Reserve Bank of Boston, are parsing out what a digital currency might look like for Americans. Privacy is a major concern, so researchers and analysts are observing China's digital yuan rollout. I think that if there is a digital yuan, privacy is going to be a very, very important part of that, said Neha Narula, director of the Digital Currency Initiative at the MIT Media Lab. The United States is pretty different than China. So I want to pause there and say, yes, definitely that is true in many ways, but in this particular case, the way that it's true is that China has used digital currency to really control their citizens. And that is not what we want. We want a decentralized currency, something that no one is in charge of, something that the central bank is not in charge of, but something that is decentralized, able to be only changed if the users of that digital currency vote to have it changed. Otherwise, it is computer code in a lot of different people's hands, and it is not centrally controlled. That's the system we want to get away from, and that's the system that unfortunately China is using with their digital currency. The article goes on to say another concern is access. According to the Pew Research Center, 7% of Americans say they don't use the internet. For Black Americans, that rises to 9%, and for Americans over the age of 65, that rises to 25%. Americans with a disability are about 3 times as likely as those without a disability to say they never go online. That is part of what MIT is researching. Most of the work that we're doing assumes that CBDCs will coexist with physical cash and that users will still be able to use physical cash if they want to, Narula said. The idea of a central bank digital currency in the U.S. is aimed in part at making sure the dollar stays the monetary leader in the world economy. The United States should not rest on its current leadership in this area. It should push ahead and develop a clear strategy for how to remain very strong and take advantage of the strength of the dollar, said Darrell Duffy, a professor of finance at Stanford University's Graduate School of Business. Others see the digital yuan as insidious. The digital yuan is the largest threat to the West that we've faced in the last 30 to 40 years. It allows China to get their claws into everyone in the West and allows them to export their digital authoritarianism, said Kyle Bass of Heyman Capital Management. End of article. Well, I agree with that, and that's why we don't want to go with the Chinese centralized style of digital currency. But here's what this article didn't tell you. What it didn't tell you is that there are actually 5 central bank digital currencies that already are in existence and being used. The very first one came out in the Bahamas and was appropriately named the Sand Dollar. Also, St. Kitts and Nevis, Antigua and Barbuda, St. Lucia and Grenada also are using digital currencies. So they're already in the space of using digital currencies, not just experimenting or thinking about it or pilot testing, but actually fully launched. 5 countries. In addition to that, they didn't tell you there's 81 countries that are considering digital currencies. I have to say, it has to be much more than consideration because things like this cannot be sporadic. They must be planned years, sometimes decades in advance, because the change, the coordination, the rules, the laws, everything that has to happen to support a currency has to happen. And that can take a very long time. And so the planning has to be extensive. What we know is that China actually started testing their digital yuan back in 2014. That came out in an article last week. So it's been going on much longer than these articles might make it seem. In addition to that, there's 14 other countries that are currently in the pilot stage of starting to use central bank digital currencies. Countries like Sweden and South Korea are now piloting their central bank digital currencies and preparing for a possible full launch. From an article on Bitcoin.com, it says 81 countries are now exploring central bank digital currencies according to a new tracker. This number is 46 more countries than the number in May last year. In addition, 5 countries have fully launched their own digital currencies. The center noted that of the countries with the 4 largest central banks, the U.S. Federal Reserve, the European Central Bank, the Bank of Japan, and the Bank of England, the United States is furthest behind in developing a state-backed digital currency. Federal Reserve Chairman Jerome Powell said in February that the digital dollar was a very high priority for the Fed. However, he emphasized the need to get it right instead of rushing to launch a digital dollar, particularly to compete with China's digital yuan. Nonetheless, the chairman recently said you wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital U.S. currency. I think that's one of the stronger arguments in its favor. So we know that 5 countries are currently using central bank digital currencies. The digital yuan is close to being ready. The U.S. central bank digital currency is somewhat lagging and behind schedule, so they say. And there's 81 countries currently considering central bank digital currencies, which means that they are just in different phases of readiness to get ready to use this. This is the direction that banking is going. But what, again, we want is a decentralized situation. We don't want centralized control of these central bank digital currencies. On the investing side, it was very interesting to hear that JP Morgan last week approved its investors to be able to invest in cryptocurrencies. This was after Jamie Dimon, CEO, had said it would never happen and that he would fire anyone that was caught using a cryptocurrency because, after all, cryptocurrencies are direct competition for the US dollar, and any traditional bank is losing assets. They're flooding out of the traditional banking system, out of US dollars, and into cryptocurrencies. So this is direct competition for banks, and they don't like it. But it was very interesting that JP Morgan approved the ability for its high net worth customers to be able to begin investing in cryptocurrencies. My take on that is they know people want it and they know they're going to buy it somewhere, so they may as well make the commission on it. I think they see this as inevitable, and it is. So they finally decided it was time to stick their toe in the water, at least for their ultra high net worth clients. Some more interesting information came out in a research report, and that is that more than 90% of institutions are interested in digital assets and expect to have allocations by 2026. 90%. This is something that, again, individual investors aren't hearing about, aren't understanding the power of investing in cryptocurrency, and that the wealthiest institutions in the world are all getting in and can't wait to get in, including endowments, including hedge funds, including ultra high net worth investors, family offices, all of the very, very top 1% of the richest people in the world are investing in cryptocurrencies. But meanwhile, all we hear on the news is how terrible cryptocurrency is, how it's a joke, how it's really awful and we shouldn't invest in it, we shouldn't consider it. Meanwhile, 90% of institutions are planning to invest in it in the next 5 years. And this study was done by Fidelity Digital Assets. And Tom Jessup, president of Fidelity Digital Assets, said, "The increased interest and adoption we're seeing is a reflection of the growing sophistication and institutionalization of the digital assets ecosystem. The pandemic and fiscal and monetary measures in response to it has been a catalyst for many institutional investors to define their investment thesis and operationalize it." According to the study, almost 9 in 10 investors find characteristics of digital assets appealing, with increases in both US and Europe. Digital assets' high potential upside and low correlation to other assets, for example, like stocks, that's my addition, have grown in appeal to institutional investors in recent years, with the potential upside gaining 16 points among U.S. investors since 2019 and 13 points among European investors since 2020. Price volatility remains the main barrier to adoption, followed by a lack of fundamentals to gauge value and concerns around market manipulation. However, investors cited less concern about complexity for institutions and market infrastructure than previously. And I'll talk more about that in a minute. But it also says more than 3/4, 77% of European investors believe digital assets should be part of a portfolio. 69% of U.S. investors share this belief compared to 64% the prior year. All right, so that's the majority from that article. Let's just talk about price volatility and safety, because those are valid concerns. And price volatility is extreme. I grant you that. But it's also extreme on the upside. And that is what is so incredible, is that when $1,000 can grow into 6 figures in 5 years, it's worth it to put up with 30% price swings or 50% price swings or even more. Because if you hold on and have a long-term perspective and know the right cryptocurrencies to invest in, because they have important use cases in the future, they are technology that's going to be adopted and used, such as by central banks. These are things that are going to be part of the central bank digital currencies, and therefore they're going to be tremendously valuable. And that's why getting in early with a small portion of your portfolio is such a powerful part of adding to your portfolio. Just 3 to 5% added to your portfolio can make an enormous difference. And once you realize that just holding on through the volatility is all you need to do, you don't need to be trading, you don't need to be worrying about buying and selling. You need to understand the right long-term winners and then just buy and hold. And that is going to get you through the volatility. As far as safety, yes, we hear all these different stories about Bitcoin getting hacked, but there are ways to protect yourself. One of the things you want to do with cryptocurrency is not leave your currency on an exchange. Because if you don't actually hold the keys to your cryptocurrency, then technically you don't really own your cryptocurrency. So you want to get it in your possession. How do you do that? There's a little device called a nano that is like a thumb drive. It's a piece of technology that you buy, it's physical, and it connects in with your cryptocurrency and stores it offline so that you don't have any way to be hacked. There's no way that they can get into your account unless you give them your seed phrases, which are 24 words that you would have to voluntarily give someone in order for them to get into your account. It's very unlikely that that's going to happen to you. So getting a nano means you can store your cryptocurrency offline safely and for years to come. I think in 2026, by the time 90% of institutions have come into cryptocurrency, the market valuation is going to be much higher than $1.5 trillion. It's going to be multiple trillions of dollars. And it's going to go into the most valuable cryptocurrency technologies. And if you know what those are, I think there's a lot of money to be made. It's what they call an asymmetric investment. It means that there's very little downside risk because you don't have to invest much. That $1,000 can turn into a six-figure amount. I can't guarantee it, but I do think there's an awfully good chance that that will happen again. It happened in the last 5 years. I think that is likely to happen again in the next 5 years. So, what do we know? We know that central bank digital currencies are being adopted. We know that 81 countries are now very close to piloting or working with or starting their central bank digital currencies. We know that 90% of institutions plan to be invested in cryptocurrencies within the next 5 years. And we know this is a very good time, an early time to get in before all of those other adopters come in, because now you're ahead of the curve, you're ahead of that big wall of money that's going to be coming in, and this is the time to buy these things for pennies on the dollar. Many are selling for under $1 a share or under $5 a share, what we would call a coin in the cryptocurrency space, but you would call a share of stock. So for 53 cents, you can buy my favorite cryptocurrency of all time. Those are the kinds of things that can make life-changing wealth for a very small investment. Of course, you can ignore what I'm saying. You can completely discount and not listen to anything that I'm talking about. And 5 years from now, these things will be standard. These things will be much larger. There will be much more money invested in them. And then you'll feel comfortable and say, oh, yes, this is being used. Yes, this is a standard. Yes, this is the way that we're going with having physical currency and central bank digital currencies. Oh, yes, I see that now. Oh, now I want to invest. Well, guess what? Now you're investing at a much higher price. You're investing at a much higher valuation. You're investing much later in the game. That's 5 years down the road from where we are today. The much lower risk time is to get in early. The much higher risk time is to wait and get in later. Same with real estate. You can buy when prices are low, and you can buy a home, or you can wait until prices are at top dollar and you get into a bidding war. Which one has the most risk of downside? Not the one that you bought when it was low priced, the one that you paid top dollar for and got into a bidding war over when it was late into the market. That's where there's more risk. So think about being an early investor with a small amount of money. That's all we're talking about, is a small amount of money. I think there is an important investment to be made in this very exciting new asset class. And as your wealth mentor, it's my duty to share with you those opportunities to show you where wealth can be made and where the asymmetric investment is that gives you little investment that you have to make but has some really big upside. That's what we're talking about. If this is something that sounds interesting to you and you're ready to know more about it, you need some instruction, you need to know a lot of the background, you need to know where to invest, how to invest, which cryptocurrencies to invest in, consider joining the VIP experience. We have a crypto tutorial that gives you all of the details, and it's a frequently asked question manual of questions that people have asked prior to you, so that everything you can think of is answered there. And I'm there to answer any questions that might not be there. So we have everything to get you started in cryptocurrency, and also a full stock asset allocation if that's something you're looking for too. You can check that out on my website at lindapjones.com/why join the VIP experience. It's on my website under programs, and for the next week until August 1st, use the code SAVE50, capital letter S, capital letter A, capital letter V, capital letter E, 50, to save 50%. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.